It is episode 73, and we're again continuing with Home Buyer Month. First time Home Buyer Month. We have some awesome information in today's episode. My name is Sam Thompson. Of course, we are joined with Joe Bladek. Joe, how are you doing today?
Sam, not doing too bad. It's great to be here today and really excited to be here on episode, I think it's 73. So I'm really excited. We should have a leaf blower going as well in the background here. It's the sound of spring, people cleaning up their yards, getting their places ready. So it's a wonderful thing. So if your viewers out there are hearing the buzzing, that's what's going on. Yeah, so how about you, Sam? How are you doing today?
Yeah, doing really good. Loving this weather that we've been having. It's super warm. We've been hitting the trails pretty hard already. Love hiking now that the weather's nice enough and you're not, walking around on the ice on those trails. It's a lot nicer these days.
Yeah, I remember when we used to go hiking in the winter, it'd be very slushy, a lot of just like you used to get your boots wet a lot. Now it's getting a lot nicer. Hikes are getting a lot more enjoyable, just being out there, seeing the nature, seeing also like the flowers growing. I noticed in my garden, I have some new flowers growing, which is nice to see as well.
Oh, nice. Yeah. It's been great weather for them. I mean, you think we reached almost 18, 19 degrees this week. So it's starting to feel like summer some days.
It definitely is. So let's dive right in today to our first time home buyer series that we're doing today, because I'm really excited about this. I really would like to get to share this all with everyone, because this is the really awesome account that has been introduced, Sam, the new Canadian first time home buyer home savings account.
Yeah, it's really exciting. I know that, if memory serves, I know when we were reviewing all of the political platforms, this first home savings account was projected. So it's nice to see a bit of follow through, see that, it's been introduced to the budget. And it actually is quite an exciting account for anybody who is a first time home buyer. And we have, again, a lot of really awesome information just to kind of give you guys the rundown of how it works, who it's for, and again, looking more into when it actually is going to be released and when you can expect to take advantage of this new savings account.
Sounds great. Well, let's take a look now at this savings account. First off, let's just talk about what it is. So I know that it's a new program introduced by the government. I know that we have a few other savings accounts that Canadians use right now for home ownership, so we can talk about those first. I know a lot of people have used the RRSP home buyers plan, first-time home buyers, and as well as buyers that have bought in the past, but have had enough time pass that they can actually be qualified as a first-time home buyer. Again, use that account to save for down payment, right, Sam?
Yes, yeah. There was a couple options, like you're saying, through the home buyer plan. You could use some of your RRSP savings tax-free towards your down payment. So this new this new account seems to be almost a bit of an overlap or a merge between what the home buyer plan was and just a typical tax-free savings account.
Absolutely. So let's take a look also at what you can do with this account. I know with an RSP home buyers plan and a TFSA, someone, if they put money into that account, can just let it sit there, but they can also let it grow in a stock or a bond or some sort of GIC. And that extra income is usually taxed in an account that is not a home buyers plan or TFSA, but in these accounts, it's actually not taxed. The same.
Yeah, absolutely. Yeah, they have those same advantages without it being taxed. So it does look like, even if you're starting early and you're planning your down payment, that's maybe you're still working towards that first home purchase. You have the option to use it as an investment source and grow that a bit while you're saving as well.
Absolutely. So those are good accounts that people can use just to get into buying their home for the first time. But this new account this is something different, and it's going to be really something that is going to make it a lot different for first-time home buyers. So let's talk about who it is for now. One of the qualifications, Sam, is that you must be a resident of Canada, and that's pretty
Mhm.
self-explanatory.
Yeah.
Yeah, and then another one is 18 years of age or older. So unfortunately, my son won't be able to open up his first home savings account just yet, but that's okay. He's not even 10 years old yet.
You're right. He's got some years to go before he can qualify.
Yeah, but yeah, and also the other item is that you cannot have owned a home for at any time in the year the account is opened or during the preceding 4 calendar years, which is very similar to the RRSP home buyers plan.
Mhm. Yeah, that's right. That if you haven't owned a home in the last 4 calendar years, you would requalify for the program. So again, it's a really good program. And looking a bit into more of the specifics of how it works, because again, there already is a home buyers plan that borrowers can withdraw from their RSP, and of course they can always just use their tax-free savings account. But let's look a little bit about how it's different and the different requirements that are involved in this account. And I guess the first thing to look at is the total maximum amount you can have in this new account is about $40,000. And that's per couple. So I know that the home buyer plan was maxed at 35,000
Okay.
per individual, or 70,000 per couple. So assuming you wanted to take full advantage of this, it does give you an extra $10,000 of room to work with if you're looking to save that down payment together.
You bet. That's a great advantage here because a lot of home buyers have mentioned that the $35,000 each is not really enough anymore. So having that extra 5,000 and 10,000 per couple is really going to make a difference. You're right, Sam.
Mhm.
Another interesting point about this account will be that the annual contributions are actually maxed at a static $8,000 per year. And so say on year one, you'd be able to contribute $8,000, and on year two, you'd be able to contribute another $8,000. But if you didn't contribute on year one, that extra room is actually not carried forward the same way as an RSP or the TFSA. So if you didn't contribute year one $8,000, your contribution for year two is still only going to be $8,000 and not $16,000. And that is something interesting.
Yeah, it's definitely is an interesting component to the account, which I think maybe is an attempt to encourage people to utilize it, every single year that they can. I mean, I know that a lot of people, that are looking at purchasing and are needing to save that down payment, a lot of the times, if they, want that home ownership dream, they are quite aggressive in their savings. So whether or not it'll be an issue, is not necessarily known, but I think maybe it was a incentivizer for gaining traction and having people using all of that contribution room every single year.
I think so. Another item of interest is that it can be withdrawn tax-free for your down payment. And with the FHSA, comparatively to the RSP home buyers plan, is that there's actually no requirement to pay it back. And that has
Mhm.
been a big sticking point with first-time home buyers throughout the year, just because they don't want to pay the RSP back. They feel like that is a burden for them.
Mhm.
So having this removed is, I hope it's going to make it a little bit easier for first-time home buyers to actually launch in and start saving for their own down payment.
Yeah, I definitely think it will. I think a lot of the clients that we have worked with before that have used the home buyer plan, it's worked out really well. But again, being a first time buyer, you don't really want to have any additional payments on top of your mortgage payments, your property tax. Everything is already so new to you that adding an extra payment can sometimes feel like a lot. So the fact that, I think they coined it when they released it that it's tax free and it's tax free out, and there's no repayments required. I think that will gain a lot of traction with a lot of new first-time home buyers.
Perfect. That's great. And it's really good to hear that because we've needed an account for some new first-time home buyers incentives quite drastically in the last few years as home prices in Canada have seemed to run up considerably, pushing home buyers, first-time home buyers further away from the market. So just having new initiatives like this brought out by the government is a good sign.
Mhm.
So another interesting point, Sam, like in RSP, the contributions to the FHSA are going to actually lower your taxable income. And that is just fantastic.
Yeah, exactly. It's honestly a really cool a cool portion of this because again, you can essentially get that tax write-off while saving for your down payment. So it's really incentivizing being able to save your own down payment. I mean, given that a lot of the requirements for your down payment is it can't be borrowed funds, it's really kind of doubling down on that aspect
Yeah.
that, even now as you're saving for that, each year you can write off that 8,000 if you maxed out your annual contribution. You can use that to lower your income, which is an awesome program for first-time buyers.
Yeah, it really is. It's almost as if the down payment you're saving is a write-off. So,
Yeah.
that's quite outstanding for the government to come out with that. So, uh, let's keep an eye on that as
Mhm.
this account comes out. It's going to be interesting how lenders track that and ask for just. It's going to be interesting to see how lenders work with this account.
Mhm.
So at the end of the day, the account does function much like a TFSA, can be used for tax-free growth. Things they can invest in are ETFs, so things like the S&P 500, the TSE, stocks, bonds, cash, GICs, mutual funds. So that's really a lot of different vehicles. You'll be
Mhm.
able to, but some people don't even like to invest in anything. They just like to keep the money there, sitting in the account, and that is absolutely fine too, if that's what you want to do.
Yeah,
Very,
absolutely. Mhm.
very low risk way of doing it.
Yeah, for sure.
So let's take a look at some additional info on this account because I know for first-time home buyers, I remember being a first-time home buyer myself. It's always good to get as much information as I can as a first-time home buyer. So let's take a look at this. So if you withdraw the funds for any purpose other than a down payment, I bet a lot of people are asking this question right now. What happens if I don't buy a house?
Right.
So what would happen in that case, Sam?
Yeah, so if you were using the funds for any other purpose than the down payment, it would be taxed upon the withdrawal because of their, the incentive and the purpose of this account. They're really pushing for it to be strictly, a down payment saving source. So again, if you're trying to maybe find a merger between a slush and emergency fund and a down payment fund, maybe it's not worth it to put that emergency money into this account. But yeah, just to be aware that if it's not going towards a down payment, it will be taxed. And it's important as it kind of brings us into the next point as well that, well, how long can I have this account? What happens if I never buy a home, if, circumstances get that way? Well, if you don't use your account within 15 years, then all of those funds would be required to transfer to your RRSP.
Hey, that's very interesting. So it's
Yeah.
just a transfer. So I'm imagining the bank might be able to do that automatically, or as a customer, you'd be able to do that with a notice from the bank. But that's a very
Mhm.
seamless transition. So we forget about the funds. They'll just transfer it into your RSP and have a retirement account.
Yeah.
That's really good. So it's not like the funds go away, but at the
Yeah.
same time, I don't think anyone's going to forget that they have some money in their account. So
That's right.
but that's a very good way because it gives that expiry date of 15 years, just an end goal with
Mhm.
the process involved at the end of that. So with the transferring to your RSP, you still have that money and then it will remain growing tax-free for the indefinite future.
Yeah.
Yeah, that's pretty good. So can anyone get one right now? I know the government was pretty slow with this first home savings account. I think it was announced last year, right, Sam, in
I think so.
2021, with it being officially announced in 2022. And I think you had mentioned that it's not going to be available still for a little bit of time.
Yes, I think it has been released in again that federal budget, so they're preparing for it with the release date seen in 2023. So we will have to wait a little bit longer to get it, but likelihood of it coming out again, we should be able to wait. And again, it's also something that we'll keep an eye on if there are any updates. Again, as you said, the government can move pretty slow. So if they do release updates within the next, calendar year that we're waiting for this new account to drop, we can definitely keep all of you first-time home buyers updated on any changes made, or once we actually get a release date for once this account is available.
That's right. Absolutely.
Mhm.
And I imagine it'll be available through any banking institution as well. So keep an eye out for notices from your banking institution as well.
Mhm.
So that's really awesome news, Sam. Great to be on that program. Great to go over with you today. If you're a first-time home buyer out there and you're considering buying your first home and want some more information about either this account or just some other information about becoming a first-time home buyer, give Sam a contact us. We have first-time home buyer seminars that we run monthly that we can get you in on, where you can learn all about the process of buying your first home. But with that, let's get into the news, the mortgage news, because we have a lot to talk about today, Sam. In addition to this first home savings account, the first thing being that bond deal that we follow here on Canadian Mortgage Weekly. And I know that with the bond deal, it's actually being correlating to the 5-year fixed rate in Canada. Let's just take a look at what's happening there. And we'll take a look at what the bond deal is into.
Yeah, of course. We are looking here. Yeah, you should be able to see that on the screen as well. Joe, I think your mic is giving us a little bit of feedback there, but yeah, again, as you were saying, looking into the metrics for this 5-year bond yield, again, as we're seeing that, if you've been watching us for the last while, you've noticed that we're reporting that trend of the bond yield increasing and increasing. And it seems to have really sort of steadied out, at least into a tightening range of around 2.5%. I think we've been tracking for almost the last 2 weeks that bond yield has, you can see in the chart here from that initial huge spike up to 2.5. We've kind of been sitting around that 2.5 range. So, I mean, again, we are still seeing those fixed rates rise, but in terms of the bond yield, it'll be interesting to see, sort of where it ends up going from here. Because, as we've broken a lot of previous ceilings, it's just kind of in that tightening range. So it's interesting to track, where it looks like it's going to be headed.
It really does. Yeah, we have had this tightening range for a number of weeks now. So we will see where it's headed from here. I know that before this, we had that tightening range between January and March, where before that exploded up to the current tightening range.
Yeah.
So we'll just have to keep an eye on this on Canadian Mortgage Weekly, you and I, Sam, as this tightens up and what happens further, because it could go either way. Judging by the Bank of Canada's announcement yesterday, which we'll talk about shortly, could possibly keep going up. As Tiff had mentioned, Canadians should be prepared for rising interest rates.
Yeah, that's right.
So let's take a look at that CDOR rate that we follow here. And I know you put that information in for us on a weekly basis, Sam, and it had gone up this week.
Yes, it has risen again. It looks like, a fairly decent jump from the last time we were looking at it. The current CDOR rate is sitting at about 1.23%. But again, as we had mentioned, and we tracked the Bank of Canada interest rate announcement yesterday, the outlook of you looking at the CDOR rate is its variance between the prime rate, and that's going to give us an indication of how the variable rate looks, whether it's a good option, whether it's starting to tighten, it's no longer a great option. So taking into account that increase in the prime rate, we are still at a variance of under 2%, which again, it still indicates that the variable is a good option.
Absolutely. I'm glad to see that the variable is a good option. It's an option that we definitely like to recommend here. Myself, if you are a mortgage holder, give us a call to talk about if a variable mortgage is the right mortgage for you. So let's take a look at the next item here, which is the Bank of Canada rate announcement. We did do a special, Sam and I, on that yesterday with a pre-rate show, as well as a live announcement and commentary on the monetary fiscal policy for Canada. So do take a look at episode 72 that was aired on Wednesday, April 13th at 10 a.m. It's on YouTube and our mortgage page on Facebook. But essentially, we saw a supersized rate hike of 0.50%, which is 50 basis points, which puts the overnight rate right now at 1%.
Yeah, it was something that I think we had seen many articles, many different commentaries on the rate hike, calling
Yes.
for and forecasting that double rate hike, or again, as you said, that supersized rate hike. So it was interesting to see Bank of Canada do it because it, given that, the entirety of the pandemic, we didn't see them touch the rate at all. The last rate announcement, they did raise it only by 0.25%, when again, a lot of news and media sources were calling for a double rate hike. So it was interesting to see the Bank of Canada kind of step up to that 0.5% increase on this last announcement.
It really was, and it seemed to be all over the media as well, that it was being predicted as such. But now going forward, Sam, I think that we might have a little bit of pause on any future rate hikes for the next meeting or two. I know that there are a few banks out there that went on record before this rate hike saying that this would probably be the last one of the year if it was a jumbo or supersized rate hike. And since we've had that now, we've gone up a total of 75 basis points this year. This may be the last rate hike, but we don't know. We'll have to keep tracking that.
Yes, yeah, we'll have to keep an eye out for where the Bank of Canada is at. And the benefit of this last announcement that happened yesterday was a release of their monetary policy, which hopefully can give us an idea and help to track, where they're at, what their plans and goals are. And we did see that a lot of the drivers for this rate hike by, the supersized rate hike, was just, I feel like it's things that we have heard probably for the last few months now about continual supply constraints. I know that a lot of people have noticed at the pump that oil and natural gas prices have been spiking and inflation has reached a pretty high point. So all of those were a lot of the Bank of Canada's quoted, primary drivers for increasing the rate and, increasing it by by a half a point on this last announcement.
You bet. Yeah. So let's take a look now at the next item here, and that's the national house price average. I know that for the national house price average, we were hoping to have some information out today, but not quite yet. We will on the next episode. We've been following this, as you see here. It's a great looking stock by the looks of it.
That's right.
However, one of the comments yesterday on that Bank of Canada announcement, I remember hearing them say that, what is it here? I wrote it down, that housing will be still at elevated levels for the foreseeable future. Housing activity remains strong, however, will moderate and remain at elevated levels. That's what I written down yesterday. So I think these are elevated levels.
Oh, for sure. I think, yeah, it's definitely.
So we're just repeating what the Bank of Canada mentioned yesterday, and who knows, we'll keep tracking this national house price. Next week, we'll have the new data here. So we'll see if we have broken the ceiling of $816,720. I know that right now, the annual household income required to purchase a house of this price for a first-time home buyer putting minimum down payment is $170,000 per year for that family income, and that the minimum down payment would be $70,000, including closing costs. So that really maximizes that FHSA program.
Yeah, that's right. They definitely would need to, cap out either the home buyer program or the, as you're saying, the new account that they've released to make that minimum down payment.
And it really also looks like that this program, the FHSA program, combined with the national house price currently, it almost seems like the Canada and the government is expecting that there's going to be at least 2 people buying the home at the very least.
Yeah.
Because with the FHSA, there's absolutely not enough room to have enough down payment for the first-time home buyer buying themselves the nationally the average price home. So it'll have to be at least 2 people. So that's a very interesting note there as well.
Yeah, that's right.
Yeah. Anyway, Sam, it's great to have you on the show as always. Thanks for your commentary today. This has been a fantastic dive into the FHSA, first home savings account, as well as some of the mortgage stats. Sam, you're a mortgage professional with Mega Mortgage now for over 2 years, originally from Ottawa, Ontario, living in Barrie with your wife and puppy there. So great to always have you on the show today.
Yeah, thanks so much for having me. It was an awesome episode. I always love talking about first-time home buyers and how they can, maybe get some help, especially in today's market. So it was a great episode today. And yeah, for yourself, Joe, anyone who doesn't know, Joe has been in the industry for over 11 years, almost at that 11 and a half year mark. So again, thanks for your input and insight into the market. Yeah, and thank you again for having me on today's episode.
Sounds great, Sam. Don't forget, everyone watching today, thanks for watching this episode. If you have any questions about the FHSA, the Canadian First Home Savings Account, give Sam, Terry Lynn, or myself a call or a text or a social media request or anything you need to get in touch with us. We'll gladly help you guys get through your get the information you need. And if you are interested in asking us a question or providing us a topic that we can talk on our next show, feel free to comment below. Thanks for watching, and join us next week on episode 74, where Sam and I will actually dive into the first-time home buyer incentive as we continue first-time home buyer month here in April on Canadian Mortgage Weekly, Canada's weekly video mortgage news podcast. All right. So thanks very much for watching, and we'll see you all later.